This is Spencer Caldwell with the Morning Mastery. Monday morning, the week of Christmas. Man, things are so exciting. Christmas week is always just an exciting week, and hopefully we can be just as excited as we can for being adults as the children are. So I love Christmas week, the family parties, the get-togethers, everything about it is just it's exciting to me. It's just different. The spirit of Christmas is awesome. What we celebrate is awesome. So I'm thankful for Christmas week. Hopefully we can all get out there in our occupations and life and be successful and still get something done this week. So we're going to do what we can to get this morning mastery started. So today I've got my good friend Scott Smith on the line. He is our go-to guy for mortgages. We're going to be talking rates and a whole bunch of other really cool stuff. Before we do that, I'm just going to teach a quick principle, and it's about my big friend Mo. So, and you may say, who is Mo? So anyone that has a good friend Mo, M-O as in Mo, they are very, very successful. People like Michael Jordan and anyone else you can think of that has been successful in their sport, in their craft, in their business, in their life. And everyone has this friend of Big Mo, and the friend of Big Mo is momentum. So Big Mo is momentum. So anyone that is successful in life has momentum. And it brings me back to the law of inertia and the definition of inertia. Inertia is the tendency of objects in motion to stay in motion. The objects at rest to stay at rest. Unless a force causes its speed or direction to change, it is one of the fundamental principles in classic physics. So the law of inertia. So the only thing I can compare this to 100 things, but only thing that comes to my mind really quickly is I'm sure all of you remember on playgrounds back in the day they had a merry-go-round. Scott, do you remember what the merry-go-round was?
Yeah, if you could get on it without getting thrown off, it was a lot of fun.
If you could get on it without getting thrown off or getting a bar to the face, to the side of your face, right? So the merry-go-round, I think they probably outlawed this merry-go-round now because it's just not around. For whatever reason, you just don't see them on playgrounds anymore. Probably because they're extremely dangerous, and there's been plenty of lawsuits that have been done by the city or otherwise. So the merry-go-round was just awesome. If you don't know what it is, I'll explain it. And if you do know what it is, I'll explain it anyway. So Scott said if you could hop on it in time. So this merry-go-round, for one person to get that merry-go-round with 10 people on it, it actually took a lot of big effort. And you probably, with 10 people on it and pushing with one person, it's just this big old chunk of metal that has a ball bearing in the middle of it with one post that spins around and around and around. And that thing will go just as fast as whoever could get it going as far as pushing it. So typically, you'd have, 4 or 5 kids on the outside of this big circular piece of metal just running as fast as they can, pushing, and then you have a bunch of kids in the middle. And they get that thing going as fast as you could, and then everyone would hop on and just enjoy the ride. And then it eventually slow down. But, that's what we're talking about is our big friend Mo, or momentum, and the law of inertia. And once that thing got going, it went fast. In fact, if you were lightweight enough, you could hold onto the bar of that merry-go-round and literally feel like Superman just flying around this thing. So that's kind of like what we need to compare our life to with success, whether it's in just life as a parent, as a wife, a husband, a friend, a brother. Our businesses we need that type of momentum in our life to be successful. And whatever that momentum looks like, whether it's just, waking up to show up, I say that all the time. We need to have that momentum in our life just to be successful. And so that's how what I wish for you guys today is just figure out how you can get that momentum going. And once you get that momentum going, it's just the most amazing thing because success just keeps coming once you get the momentum going. So anyways, we're going to talk a little bit about mortgage rates. Mortgage rates are obviously super awesome for a super long time. And when I say super awesome for a super long time, I mean we're like in the 3s it seemed like for a long time. And then what happened after that, Scott?
Well, as we got into 2022, the broader markets recognized that inflation was going to be a really big deal based on the tremendous amount of money that we spent as a government for pandemic relief. And inflation is the arch enemy of mortgage rates, right? If you're going to lend money to somebody for 30 years, to the person lending the money, that's an asset. And as you receive payments, that's helping you out. But if you've lent the money at 3%, and inflation is at 6, 7, 8, at one point, I think we were at 9% interest, then you're actually losing money. So mortgage rates need to be equal or greater than the long-term expected inflation in order for it to be a good investment for the person lending the money. So obviously the Federal Reserve was very focused on this. They have been focused on bringing inflation down. And as the supply chains have opened up, people have gone back to work, material prices have come down. Right now, we've seen fuel, gas, energy prices come down. We've started to see inflation moderate. Now the numbers are around 3%. And what's really been a blessing for mortgage rates is seeing this inflation number go down, and also the market's anticipating when the Federal Reserve is going to start cutting interest rates. So like Spencer had mentioned earlier, this is Christmas week, and it's an exciting time. Well, it feels very much like Christmas came early to the mortgage industry, because last Wednesday, the head of the Federal Reserve, Chairman Powell, announced that not only are they no longer going to be in a mode where they're focused on raising interest rates, but they're going to be open to cutting rates in the new year. And the markets can actually bet on what rates will look like. So they call it the Federal Funds Futures Rate, and they can literally bet on when they cut rates. And I think they're betting on a 20% chance in March, but then in May it goes up to an 80% chance. So there's pretty broad speculation we'll see them cut rates up to 3 times next year. And one of the things that we heard a lot about was mortgage rates approaching 8%. And I think that scares buyers. And as a real estate pro, it scares me. So it's pretty exciting to see where rates are. And I just want to touch on that big picture. And a couple quick disclaimers. So as a wholesale lender, we can shop over 100 lenders for the lowest interest rates and the lowest lender fees. Most lenders charge around $1,800, and I can pay that for them, so it's zero. So I went out and I looked for the lowest rates today, and if we're doing an owner-occupant investment property in a way that I can state it without having to worry about all the normal compliance and disclosures, I could tell you conventional owner-occupied with great credit, you would be in the high 6s with almost no lender fees. And if you wanted to pay lower closing costs, you would get into the low 6s. So that's really a radical improvement from people talking about rates close to 8.
Yeah, that is. It's got a lot of people excited in the last few days. I see a lot of chat about it being in the high 6s when you think 8. It's amazing how much difference that is, for sure. So
and I want to talk about a couple of things. Give me just like 2 more minutes real quick. Now, when we talk about FHA or VA rates, those have come into the 5s. So right now we can do government loans in the very high 5s for very, very low lender fees. And if you're out there helping buyers right now, it's a good time to get seller concessions. And we're using those to get temporary buy downs where it's a 30-year fixed rate loan, but either for 1 year or 2 years, they have a lower interest rate. So like last week, I started a loan for a buyer where it's a 30-year fixed rate at 6.125. And in year 1, he'll have 12 months of payment at 4.1%. In year 2, he'll have a year of payments at 5.1%. And then if he does not refinance out, it'll be at 6.1% for the rest of the 30 years.
That's good.
And that's a great strategy.
That's really, really good. And I'd imagine hopefully year 2 or 3, you can just refinance to keep the 4s. That would be great.
Absolutely. And with this loan program, the savings that you enjoy monthly is put in escrow. So if and when you refinance, all of that money goes to offset the closing costs on the new loan. And we've got a program where we're doing refis for free with no lender fees, and we're refunding the appraisal.
Man, that's great. That is really awesome. Well, that's cool, Scott. Thanks for sharing that. Interest rates have played a very interesting role in the market today. I mean, it seems like inventory is still down and demand is still down. So you just got this, overhanging like why am I going to go sell my house if I've got a 3% interest rate to go, trade that in for an 8% interest rate? But now with it being in the sixes, it makes a little bit more sense, right? So likewise, why am I going to go buy a house right now if I have to pay an 8% interest rate when I think, in a few months potentially it could be 6? But now we're in the sixes, and so I think it should push up, buyers. I think there should be a little bit more buyers on the market with it coming down a little bit. Wouldn't you think so, Scott?
Yeah, for sure. And the other thing that we're doing a lot of is as we help buyers look at going from a rate of 3% or even less to a rate that starts with a 6, we're doing like cash out debt consolidation purchases. For example, like, yes, I understand your payment's going to go from $1,500 to $3,500, but let's look at this. Let's pay off both of your auto loans. Let's clean up these 4 or 5 credit cards. Let's get rid of this other installment loan for your toys. And now when we look at your total debt load, forget your mortgage payment at $1,500. Your total debt load is like $3,100. We'll get rid of all of that debt. We'll get you into the home that you want with the bigger yard, the bigger the garage, the better floor plan, the better school system for $3,500. Is it worth it to you and your family to be able to upgrade your home and get rid of all of your debt for $400 a month? And if the answer is yes, then people are glad to pay the higher interest rate.
Huh. Yeah, that's an interesting scenario. Thanks for running that by. People don't really think about that unless it's like really kind of spelled out like that. So
yeah, and we've got tools to put it in writing for them to help them understand that.
Right. Huh. That is really, really cool. Before COVID, what were the rates at?
Well, when we were pre-COVID, we were in the 4s, and then when we got into COVID, it was insane. I mean, I have a few clients that we were able to do fixed rate loans in the mid to low 2s. It was unbelievable.
That's interesting what happened there. And then COVID ends, and then we just get this inflation issue and the push up. But it seems like things are starting to balance out and stable out. It seems like the markets are also seeing it. As far as the stock market had a really, really good, a couple record-breaking days last week, great week last week. So it seems like as far as like this financial storm for the most part, for right now, is just kind of feeling good, for the most part.
For sure. And one more thing I would add is Brian Buffini just did his bold predictions for 2024 podcast, and he said that the builders have been the most robust segment of housing sales, and that they have done that by having interest rates at 6% or below. So he's of a mindset, that 6% is the magic number for interest rates, and that when we get there, we're going to have a lot of buyers hitting the market. So we need to create a sense of urgency in people on the sidelines to get out there now and to buy the house at today's price and today's rates. And if and when there's an opportunity to refinance later, we can help them with that. And I have tools where I can show them all that.
That's great. Well, that is good. That's good stuff, Scott. I really appreciate it. These rates just control so much of the market and just trickle down effect into so much of everything, It's amazing how much rates really control everything. So thanks for sharing your insight. So we're going to wrap up here shortly, and I really appreciate everyone tuning in and listening. And I hope that, if you're thinking about buying a house or know someone that's thinking about buying a house, make sure that you hit up Scott. You can text me for his number, and I can get it to you. And just make sure to hit him up. Scott, in fact, maybe you could is it cool if we just share your number with anyone and everyone listening? Okay,
yeah, absolutely. Cool. If you want to give me a call, my cell phone number is 602-373-5202. Again, that's 602-373-5202, and we will look not only for the lowest interest rates and the lowest lender costs, but the best strategy to help a buyer, an investor, a realtor, a partner put together a strategy to make this market make sense for a home buyer.
Right. So, ladies and gentlemen, do not let the rates hold you off in accomplishing your dreams. Reach out to Scott at his number, 602-373-5202. Just please mention that you heard him on our Morning Mastery with Spencer Caldwell. I appreciate your time, Scott. Is there anything else that you would like to add?
No, but I'd love to come back and talk about some different strategies that we can use to help buyers take advantage of this market, because there's so many things you can do while the market's quieter over the December, January, February timeframe that we'd love to help people make the most of that.
Cool. Yeah, we'll have to do that in the next few weeks. I appreciate it. Hey, everyone, thank you so much for listening. I hope you guys have a wonderful, beautiful day. Just Merry Christmas to all. Have a great week. We'll talk to you soon. Thank you, Scott.
Merry Christmas. All right.
Bye-bye. Bye.